So let's take a look at how we might analyze CowProfit's reports. And we're going to focus mostly on the enterprise analysis reports. We'll also take a quick look at the whole farm report, which is very, very similar to the enterprise reports. First of all of the reports use exactly the same format. We start off with value of production, subtract variable cost, minus capital costs, gives us gross margin, and then minus depreciation and unpaid labor gets us to return to equity. We try to keep cash costs separately so that you can look at what enterprises are contributing cash and which ones are using cash. And also all the amounts in enterprise reports are reported in either, in the case of livestock, dollars per cow and dollars per pound of calf produced. In the feeder enterprises, they're reported as dollars per pound gain. In all of the crop reports, it's also reported as in dollars per ton of product produced. So let's take a look at the various reports and how we might look at them, and also let's look specifically at the areas of this cow-calf report, value production, and all the way down. So the first third of the enterprise report calculates the value of production. So that includes all of the revenues down to and including miscellaneous revenue. Then in the case of livestock reports, we subtract out the cattle purchases, and that means they're treated like a negative revenue. And then the next part then are the adjustments to revenue. So that will be the inventories, receivables, the transfers, and so on. So the result is the value of production, and that means the total value produced by this enterprise in this analysis year. So the production could have been sold, could have been transferred, or it may still be in inventory, but it was still produced by the enterprise. Now the middle portion of the report are the expenses, the costs. So in this case, they're the variable costs, and these are the costs that tend to increase or decrease with changing levels of production. So more cattle, more winter feed, more cattle, more fuel. And note that some of these variable costs are valuable benchmarks for comparison purposes. Winter feed per cow here of $189 is one example. The bottom portion of the report shows capital costs. And these may be sometimes called indirect or fixed costs. These are costs that don't really change with varying levels of production. And they're also called fixed because they're not easily changed within the current production cycle. So also at the bottom level of the report is the summary section. So here's where we total up to get total production costs. And we've talked before about the dollars per pound of calf produced, the cost. So this $1.33 is that elusive benchmark that we keep talking about. So total production costs per pound of calf produced in this case was $1.33, and that's probably the most valuable benchmark that CowProfits produces. Return to equity is the sort of the final total, and that's total value production minus total production costs, and that represents the profit earned by the enterprise. Now, the whole farm report is really just like an enterprise analysis report, but it includes all of the enterprises together, all in one entity. So this is the way that the farm business or the ranch business performed in the analysis year. It ends up being a pretty good check on any analysis that you've done straight from your record keeping system or your accounting system. There's only slight differences between this report and enterprise reports. The whole farm report doesn't include unpaid labor, and there are no unit cost measures. Notice there's nothing by the pound or by the ton or by the cow here, because it's the whole business. And the last difference here is that we talk about net income instead of return to equity down at the bottom. So net income again represents the profit earned by the entire farm business. So next time we'll look at some other reports as we continue our talk about CowProfit's reports.